Hello everyone, I'm Daniel Carter and welcome to Law of America. The last week of June and the first days of July 2026 are bringing more significant changes to Social Security and Medicare than most people realize. Some that start tomorrow, some with deadlines closing in the next 10 days, and some that could affect every single check you receive for the rest of your life. Today I am going through all of it in order of urgency, starting with something that has never happened in the 60-year history of Medicare. Before we get into it, subscribe to this channel right now and turn on the bell. Changes like these arrive without personal letters and without reminders. The people subscribed here find out while there is still time to act. Subscribe now and let's get into it. Starting July 1st tomorrow, Medicare is doing something it has literally never done in its entire history. For the first time since Medicare was created in 1965, the program will begin covering weight loss medications. Starting July 1st, eligible Medicare beneficiaries with Part D coverage can access WGOI, Zepbound, and Fondeo for a flat $50 per month. No tiered pricing, no deductible. The same $50 whether you were at the lowest dose or the highest. To understand what this means, the Quick Pen formulation of Zepbound runs up to $699 per month without coverage. WGOI can cost up to $299. Fondo up to $349. For seniors currently paying hundreds of dollars a month out of pocket, the July 1st launch of the Medicare GLP-1 Bridge is a financial transformation. The program runs through December 31st, 2027. CMS Administrator Dr. Meet Oz said directly, "These treatments are a major medical advancement, but too many seniors are currently unable to access them due to high cost. The Medicare GLP-1 Bridge changes that. To qualify, you must be enrolled in a Medicare Part D plan. The clinical criteria are based on your BMI when you first began GLP-1 therapy, BMI 35 or higher, or BMI 30 or higher with heart failure, uncontrolled hypertension, or chronic kidney disease, or BMI 27 or higher with prediabetes, a previous heart attack, stroke, or peripheral artery disease." Two important caveats. First, the $50 copay does not count toward your Part D annual out-of-pocket cap of $2,100. It sits entirely outside the standard Part D benefit. Second, if you already receive a GLP-1 drug through Part D for diabetes or a cardiovascular condition, you are not eligible for the bridge. It specifically covers weight management use that was not previously covered. To access the program, talk to your doctor, who submits a prior authorization starting July 1st. The second development involves something many seniors have been losing sleep over: the long-term future of Social Security itself, and a debate in Congress that is heating up right now. The 2026 Social Security Trustees report released June 9th projected that the OASI Trust Fund, the fund that pays retirement and survivor benefits, will be depleted by 2032. At that point, under current law, incoming payroll tax revenue would only cover approximately 72% of scheduled benefits. That means an automatic 28% cut to every Social Security check. Not a congressional decision, not a vote, an automatic mathematical consequence built into existing law unless Congress acts before then. For the average beneficiary currently receiving $2.71 per month, a 28% cut would reduce that check by approximately $580 every single month. Right now in Washington, lawmakers are actively debating what to do. One proposal drawing attention comes from the Committee for a Responsible Federal Budget, a nonpartisan think tank, which has put forward what they call the six-figure limit. Under this proposal, couples receiving more than $100,000 per year in combined Social Security benefits would see their payments capped at that level. For a single retiree, the cap would be $50,000. Senator Lindsey Graham, responding to the proposal at a Senate hearing in March, said, "There was a time in my life where that Social Security check really mattered. Now there's a time in my life where I could probably get by with less. And if that's what it takes to save Social Security, count me in." Other proposals on the table include removing or raising the payroll tax cap, currently set at $184,500, and a separate bipartisan plan from Senators Cassidy and Caney that would borrow $1.5 trillion to create a government investment fund. None of these proposals have passed. None are law today. But the 2032 deadline is real. The automatic 28% cut is real, and the debate is happening right now. This is the kind of situation where staying informed matters, because whatever Congress ultimately decides will affect your check directly. The third thing happening right now is the beginning of a process that will determine how much your Social Security Security check increases next January. July is the first month of the 3-month window, July, August, and September, that the Bureau of Labor Statistics uses to calculate the official Consumer Price Index for urban wage earners and clerical workers, or CPI-W. That 3-month average is what SSA uses to set the annual cost of living adjustment. The COLA announcement for 2027 will come in October, and right now, independent analysts are projecting it could be meaningfully higher than this year's 2.8% increase. The Senior Citizens League projects 3.9%. Independent analyst Mary Johnson estimates as high as 4.2%, but those are projections based on data through May. What actually happens to prices this July, August, and September is what will determine the official number. If gas prices stay elevated, if grocery costs keep climbing, the COLA moves higher. If inflation cools, it comes in lower. You will not know the official 2027 COLA until October, but that measurement process starts right now. The fourth change affects everyone who has ever tried to contact the Social Security Administration in 2026, and understanding it can save you hours of frustration. As of March 7th, 2026, the Social Security Administration shifted to a centralized national service model. Before that date, when you called SSA or visited a local office, you were typically connected to staff familiar with your region, your state's Medicaid rules, and the local office procedures that applied to your situation. Under the new model, calls are routed nationally. The person who picks up may be located anywhere in the country. They are trained SSA employees, but they may not know the local context that affects your specific case. And several senators have formally written to SSA raising concerns about the consistency of information callers are receiving. The practical advice: when you call SSA at 1-807-72-1213, have your Social Security number ready. Know your specific question before you call, and if the information you receive does not match what you expected or what you were previously told, call back and ask for clarification. Different agents may give different answers under the new system. The best way to avoid the phone system entirely for routine tasks is to use your My Social Security online account at ssa.gov, where you can check your payment status, update your direct deposit, download your benefit verification letter, and access your earnings record without waiting on hold. The fifth and final area is one that affects every single person watching this right now. Not because you will be victimized, but because knowing the exact playbook scammers are using right now is the single most effective protection that exists. Government impersonation scams targeting Social Security and Medicare recipients surged 25% in 2025, with the FTC receiving more than $330,000 complaints. Reported losses among adults 60 and older reached $2.44 billion in 2024, and the FTC estimates the actual figure accounting for the majority of cases that go unreported is somewhere between $10 billion and $81 billion per year. These are not unsophisticated operations. Scammers in 2026 are using AI voice cloning technology to impersonate family members, detailed healthcare data stolen in the Change Healthcare breach to personalize their calls with your doctor's name and your medications, and physical letters printed on what appears to be official SSA letterhead. Here is what you need to know cold so that you do not have to reason under pressure when a call arrives. The real Social Security Administration will never threaten to suspend your Social Security number. That is not something that happens. SSA will never demand immediate payment over the phone, by gift card, by wire transfer, or by cryptocurrency. SSA will never require you to pay a fee to receive your COLA increase. COLA increases are automatic and require no action from you. SSA will never contact you through social media about your benefits. SSA will never ask you to keep the call secret. If any of these things happen, it is a scam, regardless of what the caller ID shows, regardless of what name the caller gives, regardless of how much personal information they already seem to have about you. The government communicates by mail and moves slowly. Anyone on the phone creating urgency and ending the call with a payment request is not from the government. Hang up. Report it at oig.sa.gov or by calling the SSA fraud hotline at 1-802-690271. So here's the complete picture for this week and the weeks ahead. The Medicare GLP-1 bridge launches July 1st. If you have Part D coverage and meet the BMI criteria, talk to your doctor this week. The Social Security Trust Fund faces a 2032 deadline and an automatic 28% cut if Congress does not act. The debate is happening now and will intensify through the election season. July is the first month of the official COLA measurement window. The 2027 COLA announcement comes in October. SSA now routes calls nationally under a centralized model. Use ssa.gov for routine tasks and know your question before you call. And government impersonation scams are at record levels. The only people who demand immediate payment over the phone claiming to be from SSA are scammers every single time. Subscribe, share this with someone you know on Social Security or Medicare, and I will see you in the next time.